as a speaker to speak at the meeting, the audio and video will be enabled when the chairman instructs to do so. Now I hand over the proceedings to the company secretary. Over to you, madam.
Thank you, ma'am. Through VC or other audio-visual means is being made available for the members. During the AGM, if a member faces any technical issue, you may contact the helpline number mentioned in the AGM notice. Members are requested to refer to the instructions provided in the AGM notice for participation and voting during the meeting. The company had provided remote e-voting facility to there will be no proposing and seconding of resolutions and no voting by show of hands. Members seeking to inspect the register as required under the Companies Act and send their request to divya.d@magnacast.com, mail ID of the company secretary. I also wish to state that the proceedings of this meeting is being recorded and the recorded video will be posted on the
great pleasure in introducing the directors who are present at this meeting. Special Amrit.
Yeah. You can read it.
You have
Oh, I have to. I'm Krishna Samaraj.
Vijayalakshmi Narendra, Independent Director. I am attending the meeting from my residence at Coimbatore.
We have the requisite quorum present through video conferencing to conduct proceedings of this brief on the operations of the company. Thank you.
Thank you, Chairman. Good afternoon to all the shareholders. Sent to the shareholders in advance. FY25 performance. During the last financial year, 24 crores, not lakhs, 176 crores. The export revenue during the year was 86.81 crores compared to rupees 66.15 crores in the previous year, registering an increase by 31.22%. During the year, the domestic market has also increased by 15.26%, from 74.27 crores in the previous year to 85.6 crores in the year under review. Of the year FY26, we have also declared, given the results a couple of weeks ago, the total revenue during Q1 FY26 was 48.52 crores, which is an increase of 15.0. The PAT, profit after tax, was 6.65 crores compared to 4.81 crores in Q1 FY25, and also 6.72 crores payment of dividend at the rate of 60% for FY25 as against 50% in (2033). There may be a short-term blip in FY 25-26, but long-term, the 33 billion by 2033, I think will happen. Therefore, the market potential is there for us to tap. Short-term, the opportunity there is a lot of uncertainty in the minds of our customers, and our customers are advising us to be patient and to wait and see what happens. Though there is concern, there is no panic among our customers. Therefore, it gives us some breathing space. It gives us some breathing space. If the tariff rates go down to 25%, we believe we can work with the customers to preserve the business. We have more than 500 parts which have to be resourced if all our US customers were to move away. We have 500 parts they will not pay any tariffs. They will stay with us if the tariffs are at a reasonable level. Only if the 50% tariff situation sustains for a long period of time, customers may move away from us. Right now, we are in a wait and watch mode as decided commonly with the customers. Expanded capacity. In conclusion, our company is now put in a difficult situation due to circumstances beyond our control. But please bear in mind, we have seen many of such difficult situations. Including improving internal efficiencies and cost reductions, growth in the domestic market and non-tariff markets, working with our customers, US customers, to preserve and sustain the existing business, including pricing. As a note of caution, if the tariff sustains, it may Ladies and gentlemen, our company is proactively accelerating its effort to build momentum and advance our journey toward delivering greater value for our shareholders and other stakeholders. At this point, I'd like to thank various stakeholders of our company, that is the shareholders, directors, customers, employees,
Gentlemen, thank you for joining us today. As many of you are aware, the recent imposition of tariffs by the United States presents a significant challenge for our company. With 44% of our sales directed to the US market, there is a direct impact. The idea was for me to focus on exploring and converting new prospects in the US. However, during these uncertain times, my immediate focus will be on strengthening relationships with our existing clients and winning additional orders from them. They also highlight the importance of building partnerships where value, reliability, and engineering expertise matter as much as price. Our foundation remains strong, built on 30 years of trusted partnerships and a proven ability to adapt in a changing environment. With your support, I am confident that we will not only navigate this period of uncertainty, but engage stronger, more connected, and better positioned to grow in the US market. Thank you.
Thank you, Ajay. I now request Vivia to take over the proceedings.
Now I shall take up the resolutions as out in the AGM notice. Item number 1, adoption of audited financial statements for the financial year ended 31st March 2025, ordinary resolution. Item number 2, declaration of dividend of rupees 6 per equity share for the financial year ended 31st March 2025. Payable to SDK and Associates, Cost Auditors, Chennai for the financial year ending 31st March 2026, ordinary resolution. And to fix remuneration, special resolution. Item number 8, alteration of articles of association of the company, special resolutions. Members may note that the text of resolutions along with the explanatory statement is already provided in the notice circulated to the members. Moving on to the question and answer session, the following 12 shareholders have registered their names as speaker shareholders. Procedure for question and answer session. Now we invite the questions from speaker shareholders. Please mention your name, portfolio or DPD ID and client ID number and the location from where you are joining. As the meeting is being recorded for statutory purpose, the members are requested not to disclose any sensitive personal information of self or others. All the questions shared guidance and does not share sensitive competitor information. So please avoid and refrain from asking such questions. Now I request the moderator to proceed with the question and answer session.
The first speaker is Rohit Vinod Hori.
Sir, a request, please continue with these VC meetings. In terms of the support to the resolution, full support to them, especially point number 7 and 8. So there are certain observations. I'll just share them very quickly. Sir, if you see the stock is highly illiquid, do you think that you should increase the paid up capital, maybe give us a generous bonus issue? Cycles or vice versa, or do you think that you should be indulging into some soft diversification, if any? With this blended average quarterly run rate, which we have somewhere around 44-45 crores every quarter, that is also considering the odds that are there in the system, do you think that gradually you will inch towards maybe 50 crore still available somewhere elsewhere from the current campus? If you can take us through one by one, if you can elaborate on all these questions and give answers to that. Lastly, sir, if there is any plant visit which is organized for the shareholders,
Madam, you can unmute yourself and ask your question.
Yeah, am I audible?
You're audible.
Good afternoon, everybody. Thank you for this opportunity. So thank you for this. Well, so what is driving the growth in exports and in general, even domestic grew by 15-16%. So is it new customers or new products or any new geographies that we have entered in the export market? Also, if you can share like the volume growth versus value growth for last year. The other question was, sir, I mean, we've done this big capex. whenever that happens. I know the current times, as I said, I'm not asking for the immediate when will this happen, but whenever it happens, what is the kind of potential that we have? And like just stepping back a bit, of course, this tariff has put spanner in the wheels a bit, but just stepping back a bit, this is, as I said, this is one of the biggest outlays for us. We have doubled our gross block. So, sir, in the last AGM, you had spoken about this vision to get to 500 crores top line in next 2-3 years. We are at about 185 odd crores right now. So, I mean, just from your perspective, how do you see that it means to get to 2.5-3 times from here? And how? So, what is the kind of visibility, or what are 'You've talked a bit on the US tariffs. I don't want to belabor too much, but just want to understand uh, what. So, of course, let's say this situation continues to, I mean, this uncertainty continues. So, we definitely will lose some business from the US because it becomes unviable. But what are the other options that we have? And what can we do? So, any things that we have in our 50%, so or slightly under 50%. So will that grow much more? And last two questions, sir. Uh, in the AGM last year and also in the annual report of this financial year, I mean of FY25, talked about the ability to manufacture parts up to 250 kgs. So I wanted to understand. So before this capex, what was our peak weight capacity? To understand the outlook for 26, you sort of mentioned it, but anything more you want to add? Do you see that top line may actually decline for this year and profits may actually decline? And last question was, sir, in the last AGM, you had kind of indicated that we may actually look at merging our related party with which we do the machining. So any
Gopal Mageshwari.
Yeah, hi. Am I audible?
You're audible.
Yes. So I have already sent my list of questions to you in detail, but I just wanted to highlight the couple of ones. One is the expansion well, as I mentioned that I have already sent my questions, I would request the management to arrange a plant visit where we as shareholders can really see how the progress of the business is happening, especially with the new capex coming on stream. Wish you all the best and thank you so much.
The next speaker is Rishikesh Chopra.
Thank you very much. I'm Rishikesh Chopra from Ghaziabad. I have invested my family funds in your company. I thank the company secretary and entire secretary team for giving me the opportunity to speak at this forum. As most of my related queries have already been covered by the chairman, previous speakers in their statements, speeches, I limit my queries session to a few. Sir, what is your COPEX plan in next 2? I wish management and all executives, entire workforce, and my co-speakers, shareholders, happy festive season. Day ahead. Pray to God for all prosperity of the company. Okay, namaskar. God bless you.
The next speaker is Mr. Abhishek.
The strongest brand in the respective segment. So as of date, how many employees are there in the company? What are the steps being taken by the management? Sir, to conduct on-call quarterly presentations and meeting with global investors on a regular basis. And I would request you to kindly arrange for a planned visit for the investor fraternity, sir, as and when it is feasible. And most of my questions are sent by email, so I shall not repeat the same questions again in the interest of time. And the planned visit may be considered, sir, at an appropriate time.
Prakash Mittal. He has not joined the meeting, so we are moving to the next speaker, Ayush Agarwal.
Hi, good evening. Am I audible?
You're audible, sir.
Yeah. So I have already sent my questions. I will quickly go through some of the important points. So the first question is, can you please mention the capacity in molding and melting before the expansion? what was the capacity utilization in FY25? Will we try to get new business? And with the expanded capacity and capability of castings from 1 kg to 250 kgs, are new customer categories or applications being targeted? Can you share concrete examples of potential orders or discussions that are underway? And do we get better margins for higher tonnage castings? And is the expansion more towards these products? And is this capex mainly what are the sustainable long-term margins? Why so much variability in margins? And what are we doing to reduce the volatility? And are margins expected to go up with this new capex? And what is the EBITDA per ton we are targeting? Are the margins different between the domestic market and the export market? And how much is the difference? As I understand, bulk of our exports comes from the US from one customer. With the contribution from top 5 indirect customers in export? And last two questions would be, a large part of our machining activities are being undertaken by Samrajya and company, which is a related party transaction. So what kind of margins do they make on these activities, and why do we not consider merging the sister concern with the listed company or doing it in-house? We should adopt good governance practices. And beyond this,
Good afternoon. Thank you for the opportunity. I have shared all my questions in advance. If you have them in front of you, I will not go through them again.
Have your questions and we will answer it in my reply. Can you hear?
The next speaker is Rav Sabha.
The kind of products that we manufacture, does US have the capacity to localize these products? Like, can they make these products locally? And if the impact of tariff is same on everyone, so it should not impact us much, right? Means, is this understanding correct? So this was the only question, and rest questions I have already sent you. I wish that you should answer all of them. Thank you.
Am I audible?
You're audible, sir.
Hi. Good afternoon, everyone. So I think, first of all, really appreciate a very candid update on the tariff side of it from the management. And, a lot of my questions have been already been asked, so I would not repeat them. Just add a few more, which have not been covered. So you mentioned that way you guys are thinking, if you can elaborate on that. On the same thing, let's say we have 50% tariff from India, but who are the alternative sources from whom the customer is buying or can buy? And if we do so, will it have a margin impact because of the higher competitive intensity in the domestic market? If you can elaborate on that, that would be really helpful. One more question, sir. In terms of we have said that we have already done a molding line up to 2000. Our export markets. So what are the things that we can do in the Europe side to kind of compensate us and de-risk us from the US exposure? If you can elaborate on that, that would also be very useful. Thank you. That's it from my side, and wish you all the best.
Jyotika, you can ask your question.
Am I audible?
You're audible.
Okay, thank you for the opportunity. I've already sent some questions in advance.
The last speaker is Kapil Chopra. He has not joined the meeting, so we can move on to the next agenda.
With this, we conclude the question session. Since we have received a lot of questions,
to answer the question relating to operations. The CFO will answer questions related to cost and finance, and others will be answered by our Managing Director.
Thank you, sir. The next question of what is the percentage of our products that are being machined? Average of 50% is a product that's been machined, out of which 64% of the parts are machined at Samraja and Co. And the balance 36% are machined outside at subcontractor rate. In terms of margins, our operating margins have expanded from about 10% in FY22 to 19% in FY25. The key drivers behind this improvement is basically product mix, increased machined and lower unmachined parts. The management view on demand, realizations and growth and margin outlook into FY26 as full expanded capacity comes on stream is uncertain as of now because of tariff issues.
I now request Mr. Ravi, CFO, to answer.
Yes. The next question is, with respect to management efforts to reduce other expenses, what are the legal professional charges and audit fees? We would like to state that the statutory and legal requirements are increasing day by day, and the cost of legal professional charges and audit fees is also increasing. These are all compliance driven. Goes from our internal approvals. So that's the main reason for the stretching of receivable and payable days. Inventory levels have been maintained on the higher side to maintain and to satisfy the short cycle customer requirements. Sales, net debt to EBITDA, operating margins, debt days and interest. Continuous process, and we are focusing on all these areas. The benefit of captive power and whether this leads to cost saving. Yes, the industry average is around 15 to 17%, whereas we are at 7 to 7.5%.
I now request Mr. Krishna Samraj, Managing Director, to answer questions related.
Operations and capacity wise. We have received questions relating to molding and melting capacity and its utilization. The total installed molding capacity of the company now stands at 2,000 metric tons per month. The project of 47 crores was used to expand the mold invest in the enhancing the melting capacity now till we get to 1,500 metric tons per month in sales. This was a question which was also brought up here. What will it take us to go up to 2,000 metric tons per month in terms of capex? It will be replacing furnaces, as and when production requires it. Next is regarding the Shinto line. Regarding the first question was regarding the time frame for full utilization of the Shinto line. We have started taking orders, new orders for the Shinto line, and as it is normal in our industry, it takes about 6 months to see the revenue. By the time we take the orders, develop products, customer qualifies it, and customer starts using it. It is a typical cycle time is 6 months. To 1,350 tons per month of good castings. This is again primarily due to the initial approval stage plus the tariff effects. There was a question, one of the speakers have asked a question, are we going to go on for high volume, low margin full utilization of the existing molding capacity, that is 2,000 tons per month of castings. We anticipate barring extended tariff issue, 24 to 36 months. The reason for such a long gestation period is, as a philosophy, we are looking for on sharing between high volume, low margin, and low volume, high margin. Previously, before the tariff issue, I would say we'll just go for low volume, high margin. Now we need to reconsider. And because we have the company at $20 to $25 million of capex by the customers. And this is for volume products. Plus, there is a general shortage of engineering talent in the US for the foundry industry. Therefore, that is why our customers are also hesitating and wondering what to do. The categories, this question has also come, what category? About what is the market share Magna is currently enjoying. Our market share is negligible. I would say it is less than 1% globally. That doesn't mean we can get the other 99%. There's a lot of metro rail markets. The split of export revenue on basis of geography is 44% US, Europe is 6%. Regarding adding more clients in Europe going ahead, yes, we are looking at it, but at present, the US market is also a little bit fragile because of the geopolitical issue. Another question was, how many customers we specifically cater to in the US? Logistics partner. We have about 20 customers in the US for whom Magna specifically caters through our supply chain partner. Tariffs at the present rate. US. So, but as a result of this tariff, not only for Magna, we are seeing a shrinkage in the US market. The US market is slowing down. So one is the tariff issue, another one is because of the tariffs, the market demand is slowing down. We believe, this question also came up here, if the tariff rate goes down, if the penal tariff is removed, the Russian tariff, the oil tariff is removed, and the rates go down to 25, definitely we will work with our customers to preserve the business. Many of our customers have expressed that up until 15% tariff, don't worry, we will take care of it. So the delta will be between 15 and 25, which we will work with our customers. Maybe we'll reduce our margins a little bit to preserve the business. Plus, of course, the rupee depreciation will also help us. Outlook for FY26. Regarding further CapEx plans in the pipeline over the next 2 years, marginal CapEx is planned for balancing output since the major CapEx is completed. We 34 machines, CNC machines, and auxiliary equipments catering exclusively to Magna's requirement. In the previous AGM, our shareholders approved limit of 25 crores. However, the actual transaction which took place was only 18 crores, which was actual size of the business we have built. This AGM, we have proposed an increase regarding merger of Samrajya & Co. with Magna. Since many of our shareholders have consistently asked us and the board to look into it, the board is exploring the various modalities of how to go about doing it, which will benefit both Magna and Samrajya & Co. Hopefully by the next thought we could expand the US markets by having one of our company members there to work with the customers and expand the business. But now, however, with the tariffs, the role has changed a little bit. Now, instead of expanding, the main goal is to preserve our business, to preserve our business there. For Mastercard and break the mold. Basically, we have obtained the trademarks for Mastercard because it's a very apt tagline for our company and its business, and break the mold also. MT. It is in an industry adjacent to an industrial park in Kallapalayam village in Coimbatore district, about 20 kilometers from our main factory. At present, there is no activity there other than security. Magna can be used for future auxiliary activities. The present area of 12-odd acres is full. So this 2.3 acres is for future auxiliary activities at the main campus. The next question is the new registered office. Why was it shifted? Basically, the registered office has been shifted to the main plant, mainly for operational convenience, and it is owned by Magna. Whereas $7 crores for the third line project, and an additional maybe 10 crores I spoke earlier about increasing the melting capacity and debottlenecking. We will have the capacity to do around 400 to 450 crores, depending on the in sales, depending on the product mix. Because 24 to 36 months. $50 top line. There was one more question regarding the power. Our power cost is 7% versus the industry average of 17%. This is due to our value addition and high value products we have, plus in addition to our facilities. Long term, we are looking at, because the newer molding line, heavier castings, naturally margins will go down. Smaller castings, margins are higher. If our plan is to have a sustainable This is according to AFS, American Foundry Society. And majority of them are high capacity automotive foundries or very, very small, what they call mom and pop operations. So new capacity to come up in the US will take minimum 3 to 4 years, because capital equipment for foundry is also not that easily available. If you remember, it took us almost 18 months to get capital equipment from Japan. Parts may go away to the US, but the majority of our parts, if the 50% tariff remains, may go outside to other countries. There was a question, what are the alternate sources? Typical alternate sources could be Mexico, Brazil, Turkey. Brazil, of course, is in the same boat as us, 50%. Something on our share to keep the customers. Ms. Jyotika had asked about Caterpillar Awards. I think you're following us on LinkedIn and our newsletters, madam. Yes, we've got the second award from Caterpillar, which our Executive Director, Mr. Mal Murugan, and Ajaya With this, I hope I've answered all your questions. Thank you very much.
Thank you, Mr. Rich. If any of our shareholders have further questions, you're most welcome to email our company secretary and get them clarified. Thank you for participating, and I now request our company secretary to propose the vote of thanks. Thank you.
The notice shall be deemed to be passed today, subject to the requisite majority. On behalf of the company, I sincerely thank all the shareholders, board members, participants for attending our 35th annual general meeting today. I extend my appreciation to all the technical and support teams who entrusted